This is Maximus Analysis here at 4 o'clock, February 11th, 2016, and we see that they came and tapped our bear market line in the sand. And it came very violently, if you guys are watching the market, it came very violently at 2:30. So let's take a look at the 30-minute chart for the ES, and you can see how much volume basically they came in at this 2:30 mark. Now, they're back into kind of oversold conditions regarding this 30-minute. You can see how volatile it got. I mean, this is just one candle, and when I say it got down to probably looking like it was trying to test this pre-market low of 1802.50, and it ramped back up with, I mean, at 2:30 at the dot. So they need to hold this 1817 intraday, and right now they're very, very vulnerable. Now we're still in oversold conditions, and it looks like they might have ran some stops or some sell stops at least. So we have to see what the overnight action is going to give us on the ES in order to make again, they could pop it up or break above this 1850 level, and they could pop it up a little bit, but if the overnight session really they flood down and break this 1800 or 1795 area, we could see some accelerated selling. But again, I don't know if they're going to have it, being that it's President's Day on Monday, and also option expiration can also cause things to kind of go null and void, because I bet you there was a bare amount of puts, weekly puts at this level, that now they're going to just expire worthless. So even hovering it or popping it up a little bit tomorrow makes them a ton of money for the long weekend. And I'm talking about market makers. I talk about weekly options all the time. I tell people that you really have to have a directional, you really have to know what you're doing directionally to play them, being that you can have a great trade, and it's more for aggressive trading, meaning an intraday time frame versus holding for a swing, because you could be doing things really, really well, and on a Monday or Tuesday, then Wednesday, Thursday, Friday, they just hover it and you'll go worthless. They burn up really, really fast. So it makes it that you really have to be experienced when viewing them. And also remember that a lot these 90% of them go worthless. So when they put those into place, it wasn't for the benefit of us, it was for the benefit of them. So let's look at the NQ now, and you could see that they're still underneath this 4100, but they definitely gave a hell of a run. You could see on the 30-minute again at that 2:30 mark, they really, really ramped things up. So we'll see exactly if this is going to be a good buy signal. And again, it's for the oversold buy signal, which again is a strategy many people use. And now you have your line in the sand, which kind of makes things very well, because there probably is, again, I don't like one bar pullbacks, so we'll see exactly what happens. The YM, again, it was down as much as almost 400 points. Again, that's going to scare most of the common people that don't really trade the market. And I don't want to make it sound like common. I don't like even the word dumb money, because people are in their 401ks. That's not dumb money. People set aside their hard earnings. But they view only the Dow, and the Dow is 30 components. We could talk about it all, have another video, but the S&P is what you should tell people to really look at as far as your friends and family that even don't participate in the market, but kind of want to make sure that 401k doesn't do the same thing as 2008, because that's still very fresh in a lot of people's minds that their 401k went in half. And if you're in your 30s or 40s, okay, you might have some time, but if you're in your 50s and 60s, it kind of can be a scary thing that you're like, listen, I can't afford another 7-8 years because I might be retired. But let's look at the bonds. You have the ZB continuing up. Again, I didn't give a sell signals yet. You also have, and these are the 10, the 20, the 5, 10, and 30-year bonds. And usually it's an inverse correlation in regards to fleeing stocks and going, or equities and going into the bond market. So that's the reason why I'm showing them. CL had the same type of really big move. Again, it continues down. You can see that it had a big move into, again, everything got affected by whatever triggered at 2:30. Again, don't want to get into conspiracies or anything like that. So, but I don't know if it's the Fed or whoever, but anyway we trade in the markets that we see, and that's another complete different discussion. But you can see CL is still on course. I mean, I thought it was going to break the 26 mark, and it got almost to it. I think it got to what, 26.05, and then just again really turned on the jets at 2:30. So let's look at some equity names quickly, running out of time. We can see that Amazon had a good day up. Again, it gave a slight sell signal, but we'll look to see what it looks like if it gets up to this 200-day. This is Amazon. You have Google. Still, again, it gave a sell signal, but more of a gap down and then kind of closed up. So let's see if it gives us, again, another sell signal, maybe in this 735 area. Let it pop up a little bit more, and don't try to chase everything, because again, you know, the perfect trade was right after earnings. But if you miss it, just wait for a good setup. You know, don't when you chase, it usually doesn't take much to squeeze a person out. Price line is here, and you can see that they're popping this up as well, and it looks fairly good. You know, the volume is decent right now, so again, we'll see what happens over the next couple days, and again, if they just hover it and into the long weekend, the markets will be closed on Monday, so be aware of that if you're holding anything. Tesla had a great morning and then ended up closing really down, so again, I would want a little bit more retracement on this to short, but definitely closing a weaker type of position. And again, that's pretty much it. I wanted to leave it at that. Again, the ES, we want to see, again, this is my line in the sand, and this is a line in the sand that needs to be closed, because again, they could tap, like they tapped 1871. They could tap this, like tap dance on it all day. I want to see it close below it, and then we'll look for another tracement, or I want to see a retracement back up and not even get past, you know, the last sell signal was around 1940. So if they strongly go up into it, okay, we have to adjust. But if they fade and not even get halfway to that, then we'll look at 1900 level is what are we going to do. So trade them well. Again, aggressive type of trading is what is the volatility is geared for. So if you're looking to hold things, and then you're going to have to look at a higher time frame, not the daily, but more the weekly, because again, this is very, very volatile intraday and daily. You're having, you know, where you're taking your profits after 2-3 hours and going from there. So trade them well, and good luck. We'll see what they do tomorrow. Take care. Remember that line of sand we want to see them get above or stay above is that 1817 for now. All right, take care.